So the STI ETF is something that we've talked about on this channel many times, and I think because that is a pretty good ETF to own. Though many might say that it's a seriously terrible index, some actually enjoy holding this ETF and getting an annual yield of 3.5%. And for many of us who are working salarymen, tracking the stock market can be a daunting task. Even with apps these days, it can consume quite an amount of time reading up on various companies. And this is why I prefer buying an index fund. An index fund is a portfolio of stocks or bonds designed to mimic the composition and the performance of the financial market index. So in general, index funds have lower fees and expenses as compared to an actively managed fund, which means that the index fund allows you to grow your money passively as well. And in Singapore, we have quite a few ETF or index funds that are pretty popular, like ES3 G3B, ABF Singapore Bond, Philip Singapore Income, Lion Philip S REIT, S&P 500 ETF, and Gold Shares ETF. But today, we're going to talk about the two most popular ETF or index fund, STI ETF, which comes in two forms of ES3 and G3B. STI ETF tracks our local index, the STI, or the Straits Times Index, which sits at about $3,150 at the point of recording. And it's a pretty hefty investment to put money into, and that's not what many small investors like me is able to do and to afford. And at $3,100 per share, it's almost an average person's salary in Singapore, and that's considering that you do not spend money on food, lodging, entertainment, and you just purely invest. At the time of recording, both STI ETF sits at roughly $3.70 per piece, and it's much more affordable than buying the STI Index. And if you're using Tiger Brokers, you'll be able to buy a minimum of 10 shares, which costs you roughly $31.70. And by using my link in the description down below, you'll enjoy some commission-free trades, which will save you a couple of dollars over a period of time. So now imagine being able to own a small portion of the STI at a fraction of the cost. And that is what effectively an STI ETF is in a nutshell. So I'm pretty sure that when you come across this video, you probably have seen some other videos saying that the STI ETF might not be the best investment, or it is not a good investment to begin with. And that's why it has that name, Seriously Terrible Index. And I got to be real here because it is really terrible. And I'm not even laughing when I'm saying it, because in the last 10 years, the STI has remained almost flat as compared to S&P 500 Index, which is growing at a much faster rate. Some might even say that the Singapore market is too small for growth, and with 60% of the STI being made up of the local banks. And with this comes the risk that if we were to face another financial recession, this is where the index will start to lose out in performance. But for me, if you're a beginner, getting your toes a little bit wet and learning about the stock market and all, owning some STI ETF might be something that you will go for. And here's why. Firstly, the STI ETF is a basket of stock that contains the top 30 performing companies in Singapore. So companies include DBS, OCBC, UOB, Singtel, CapitaLand, and etc. You can say that by buying this ETF, you're owning a little bit of everything that's within the ETF itself, and hence you might not need to diversify anymore. Though we might be very heavy in financials, there are other stocks or ETF that we can purchase to reduce the exposure that we have already to the financial markets. However, do not take this as financial advice, and always do your own research before putting money into any investment instrument. So ES3 is also a dividend-paying ETF, and in Singapore, because there is no capital gain taxes, you'll be receiving the full dividend when it's paid out. And currently, its dividend is roughly 12 cents, which gives us a yield of about 3.7 to almost 4%. So as compared to the US dividend stocks, we are subject to a 30% tax. Personally, I think it's not too bad to own some STI ETF, as it's almost giving 4% of dividends, which beats inflation. And when the dividends are paid out, one is able to accumulate and reinvest it and to get more ETFs. And this compounds your money and makes it work harder for you. And by industry standards, 4% is some sort of the magic number for retirement. So let's say you have about $1 million invested, and taking out 4% a year, which is about $40,000, will provide you a pretty comfortable life. And bear in mind that you're only taking out the dividends and not the capital. And this leaves you with plenty in an event that you might want to have a big purchase in the near future. So if you were to Google STI ETF, chances are you'll probably see two ETFs are available. The first one is the SPDR ES3 and the second one is the Nikko AM, which is G3B. Both of these STI ETFs are both listed on the SGX as well. So both ES3 and G3B are trading under different stock tickers, but they are very similar in composition of companies that they hold, the index that they are tracking, which is the STI Index, their pricing, as well as the dividend yield. So you must be wondering, what's the difference? So one of the key differences is the fund manager that's managing the ETF. So for example, ES3 is managed by Straits Global Advisors or SSGA, while G3B is managed by Nikko Asset Management, hence Nikko AM. Both these fund managers are pretty well established and have been around for many years, so you don't have to worry about that. So the State Street Global Advisors or SSGA manages the SPDR family of ETFs. So chances are if you see those SPDR ETF in the market, they are probably managed by them. And as for Nikko AM or Nikko Asset Management, they started off in Japan and they are one of the largest asset managers in Asia. So the other key difference is when did the fund start and how much are they managing. So ES3 started back in April 2002 and it amassed an AUM of 1.7 billion. While G3B listed in February 2009 and currently manages an AUM of $575 million. Though past performance isn't indicative of future results, this is just a gauge for you. One of the other differences that you might consider in picking ES3 or G3B is the dividend payout date. So ES3 pays out dividends every half yearly, once in February and in August, while G3B pays out in January and July. Other than that, both these ETFs are very similar in characteristics, price and yield. Choosing one over the other could be month that dividends are being paid out, and I think what will help is to have an Excel sheet to track your dividend payouts that will come in handy when planning for all these payouts. So personally, something that I'm really trying out right now is to see that if I can purchase a select number of stocks and whether it's possible to get dividends payout every single month on a monthly basis. And ideally, it can help me support the small investors account, or even better, help you guys see that even buying the SGX stock market, which is something one should consider even though there's a low upside, but getting stable and consistent dividends is something that we can work towards. But at the end of the day, there are more than one way that people can look at and decide if they should purchase a stock or an ETF. One should always do some research or leverage on information available on different brokerages to see if it's a particular stock or an ETF is for you. Like Tiger Brokers, they do offer low commissions, and with as low as $50, you'll be able to purchase 10 ES3 or G3B. And if you fund your account with $2,000 right now, you'll receive one free Apple stock. Links are in the description down below. However, if you're unable to commit to a lump sum investing, local banks like DBS, UOB and OCBC do provide some investment solutions. So these are called RSPs or regular savings plan. With RSP, all you need is to set aside $100 a month and the bank does all the heavy lifting of purchasing the stocks for you. So for example, like DBS Invest Saver, you'll be able to choose from 4 different kind of ETFs in their ETF segment. So this includes G3B, the Nikko AM STI ETF, there's an ABF Singapore bond, Nikko AM corporate bond, and Nikko AM REIT ETF. But do note that the fees are a little higher at 0.82% per transaction, but this brings you the convenience because you don't have to purchase a stock yourself or try to time the market and end up not purchasing anything at all. So in the last couple of months, I've been adding ES3 into my portfolio, and now our account stands at about $3,900. So we should be expecting some dividends coming in the next month or two, and hopefully we can use these dividends to purchase even more ETFs and stocks. So that's the end of today's video. Smash the like button, it helps the channel quite a bit. Subscribe if you haven't, and I'll see you in the next video.